Hey, it's Danny Brown with The Deal. Our next guest, Bradley Goldenberg. He is the co-founder of Square Dial Real Estate Capital Partners. He's also the Goldenberg Real Estate Group, one of the top retail brokers for decades in London. He's going to give us his take now on the capital markets, the commercial markets, the residential markets in London, what's going on with the coronavirus, what's happening in the city, the pulse and all that. Great guy, known him for many years. Good dude. And it's going to give you a fresh take on real estate in the London market. We hope you're all safe. We appreciate you listening in. Anywhere you subscribe, check out The Deal with Danny Brown, and we're going to bring you some more fresh content. Take care. So Bradley, what's going on in the UK, baby?
Well, I think, we got the sun shining, so that helps.
Do you have the sun shining?
We have the sun shining. We have probably 70 degrees. So lockdown in London is not so miserable.
All right. So for those of you joining us, I have Bradley Goldenberg on The Deal with Danny Brown. Thank you, Bradley, for joining us all the way from London. Bradley is a commercial investor, real estate investor, and has been a broker a long time, known him for many years. We're going to get into your full intro after the episode. We edited in. So just welcome to the show. How's it going out there in London?
London's good. I mean, apart from obviously the backdrop of misery that COVID, we call it coronavirus. I think in the States you just call it COVID. Is that right?
I call it Corona.
Okay, good. All right. It used to be a
Corona, whatever it is. And how is Boris? How's the Prime Minister doing? I hear he's healing.
Well, we're hoping so. It was a big shock, I think. I suppose it was inevitable that some high-ranking politician, with all the work they do and all the people they see, that would catch it. But I think it was it's still a bit of a shock when you hear the Prime Minister has it. And he certainly developed a big popularity here off the back of Brexit and so on and so forth. So I think the people have taken it pretty seriously. I suppose on the flip side, it's kind of helped people. I think since he got sick, people have kind of taken a view. Well, hang on, this is real. We all know who Boris is, and Boris has got it. So we've got to be sensible because I think it took some people a bit of time to actually understand the full impact that Corona can have. Yeah,
absolutely. It took some time here. About 30 days ago, I'd say about mid-March, we went on shelter in place in California, and everyone started taking it serious from that point on. It would have been nicer if we knew or took it a little more serious a few weeks earlier, but I think we were doing pretty good over here. The shelter in place has really worked. They're saying the curve is starting to bend in the right direction for the first time. So that's positive news in all this. What are they saying in London? How's the corona, the deaths and the infections happening?
Well, so far, I haven't seen today's stats, but as of yesterday, we had about 6,000 deaths. The difficulty I think that we have in correlating the deaths to the cases was that we haven't been testing in the same way that other countries have been testing. Yeah. So initially there were tests, but then those tests were only for people who had been to an infected one of the main infected countries, China, Hong Kong, etc., or had been in touch with someone who had come back. So those are the initial tests. So then people started to develop symptoms, but unless you had a bad persistent cough or you had a high fever, you were just told to stay at home. So people weren't being tested. So what we can't really accurately correlate is the deaths versus the real number of cases. We only know the cases versus those against those who have been tested. Yeah. So that makes it kind of difficult. But in terms of how we're doing, I mean, our lockdown is we're kind of two and a bit weeks in. It was meant to be 3 weeks to start with. The plan was the government were going to have a meeting on Monday to kind of then relay to the public what comes next. There's talk that might be delayed now because of Boris being incapacitated, but if that's the case, they can't delay it too long. So our stand-in prime minister, if you like, the guy that's taken the reins, a chap called Dominic Raab, I guess he's leading the government now, and they'll make a plan. A lot of people are expecting that it will, we'll get another couple of weeks. At the moment, we can go out, as I'm sure you guys can, for to get important things, groceries and stuff, and help people that are sick, essentials. We can also get out to exercise, but there's quite a lot of talk that might change maybe in the next few days, mainly because we got this great weather and people can't help themselves to go out and do things they shouldn't be doing. So, we're not used to the weather like you are.
Yeah. How good is the weather? What is the 60 degrees? It's perfect day.
No, I think we're at 70 today.
70, that's LA weather.
There you go.
We're raining here. We switch weather. So I don't want to get too in the weeds on the data and science. We're not scientists or doctors. I have you on here to talk the big game of real estate, how it's impacting your area, your business. Bradley, you've been a broker and investor for many decades. You've seen a few cycles, ups and downs. London has always been a hot market, both commercial and residential. So that's what we got you on here to talk about. So before we get into what's going on right now, why don't we give everyone a little bit of background, where you grew up, how you got into real estate, sort of what brought you to where you are now, sitting in London, dealing with the corona and the real estate market and such.
Okay, so I grew up in North London, predominantly in an area around called Hampstead, which I've been in for most of my life now. I got into the real estate business because it was a family thing. My dad and my uncle set up a business back in '72, which was at those days called Goldenberg Company. My dad was probably the leading broker for the high-end retail real estate. So he was covering some of the greatest streets in London at the high end places. I don't know if you're familiar with the street names, but New Bond Street, which is like a Rodeo Drive or Fifth Avenue, and those kind of similar streets. So dealing with luxury retail, basically. Yeah. And he was kind of the king of that really in London during the 70s and a good chunk of probably went into the 80s as well. And so they had this firm, as well as doing retail. They did other elements at that time, mainly of commercial real estate. So they did office brokerage, industrial brokerage, that kind of stuff. So that's all I ever knew. I mean, when I was a kid, that was all and I was always very close to my dad and my uncle, and I was always keen to understand what they did and so on and so forth. So I used to go in school holidays and go there and hang out and learn a bit of what was going on, which culminated in me, I think at 14 years old, I did my first office leasing deal in the school summer vacation. And
you did your first deal?
14, first deal. Yeah. I let an office floor in a building at 138 New Bond Street in Mayfair.
Ooh, impressive.
So yeah.
That's young. How is your dad? How's Henry doing?
Yeah, he's good. He's in the kind of the long-term lockdown, so he can't do anything for 12 weeks. But
he's stuck.
Yeah.
We'll send him our best. Send him our love when we say hello. So tell me about your career arc. Originally you got into the brokerage, and now you're focusing more on investing. But why don't you kind of walk us through that change and that arc?
Okay. So in terms of brokerage, after spending a few years doing a bit of retail, bit of office, bit of industrial, kind of learning the ropes of those, I decided investment seemed to be the place where the money was. So it was important, I thought, to understand how those tenants and those occupiers use their buildings. So obviously I got closer to that from doing that sort of, brokerage. And then, as I said, in the mid-90s, I got into pure investment. And it was interesting. I think the first thing I learned in that sector actually was that I noticed that many people specialized in a sector. So they would do office investment, retail investment, London investment, Manchester investment. And then I learned that I would sort of talk to an investor as this kind of green investment broker, and I'd say, so what do you want to buy? And the guy would say, well, we want to buy offices in Mayfair. So I'd start finding deals, offices in Mayfair, right, and get a note, and he wouldn't bite. And I'd phone him up, well, come on, what's going on? I've been sending you deals in Mayfair. He said, I've been sidetracked. We've been buying a shopping centre in Manchester. And then I learned what I learned from that was that in the UK, most investors are deal driven. They just care about making money. Yeah. So from that moment, I decided, right, I'm not going to be sector specific. I'm not going to be geography specific. I'm just going to be looking for deals that make money for people.
Right.
And that's what I started to do. So it was quite unusual because as a kind of niche player in the market, and most of the niche guys specialize in a sector or an area. So I built up relationships in the kind of brokering world, if you like, all over the UK in different regions, different sectors, to try and source deals that I thought would suit my different clients. And the clients that I had ranged from institutions to property companies to ultra high net worth, family trusts, whatever it may be.
The whole gamut. So that gave you a really broad exposure because you're looking at various asset classes, various geographies. It's interesting because it seems that I see both types of investors out there, those that are just very niche driven and only stick with what they know. And then I see what you're talking about, chasing the yield, chasing the return, and they'll go from a hotel deal to a retail deal to an apartment deal to an office deal, wherever the deal is. So it sounds like that's where you really got experience, just going looking at a variety of different types of asset classes and different types of sectors of real estate.
That's right, and I think that it enabled me to be able to do more business. Yeah, because there are times where one sector's booming and another area is booming, and you can always kind of find an area that worked. And I wasn't just transacting in the UK. I mean, we did some over the years, like some great deals. I mean, and remember, we're talking about a small business. It was me. Right, in terms of transacting. So I had people around me, but in terms of who negotiated the deals, who did all of the negotiations, who ran the deals, it was me. Whereas the other firms would have big teams of people. So I was punching very much above my weight. I mean, in I guess, when would it have been? 2003, 2004, I did a deal, I was representing Goldman Sachs and one of their JV partners, and we did a sale and leaseback and then a sale of all of the Euro Disney residential accommodation, all the staff, they call them cast members, all the cast members at Disney lived in. That was a big deal, but that was Bradley Goldenberg doing it. It wasn't CBRE or one of the big firms. So I was able to get myself into a position with larger organizations who knew that I could do the deal for them. I could deliver it. Yeah. And that progressed all the way through my brokerage career when I was a broker. Right.
So why don't we talk about a few standout deals or situations that you can talk about, whether it was in UK or US or somewhere else? Is there one or two that stand out of interesting deals, big deals, funny deals, any sort of entertaining stories, whatever you can think of?
Well, in terms of deals, I suppose one of my favorite deals I did was back in 2002, 2003. And the reason it was one of my favorite deals, it was a completely off-market transaction. It was high profile, and it changed, in my view, a sector within the market. And I'll explain what it was. So obviously, everyone, I'm sure your listeners have heard of Harrods. And Harrods, which is in Knightsbridge, opposite Harrods, to the rear of a building opposite Harrods is a square called Trevor Square. And on Trevor Square housed what they call a depository. So depository is basically a big multi-story warehouse. Okay. And that warehouse was where Harrods would take the stock that came in to their main distribution hub, and then they'd put stuff into this depository, and then there was a tunnel underneath Brompton Road that serviced the store. Wow. And they decided that it wasn't really very financially astute to own such a valuable piece of real estate just for warehousing. There were better ways they could service the store, and they could do it more efficiently. So they decided that we got word that they would sell the depository. And so I represented a client then who was they were the London office of a Middle Eastern investment bank. And their business was all about residential. And I said to them, look, I think that this location is fantastic. I think we could do a great residential scheme here, and I think we should look at it. So I went to see the guy who ran the business, who was probably one of the brightest guys I've met. He was working in real estate, but he was a tax accountant, and I told him the deal, and and I'm not exaggerating here, within about a minute, he had in his head basically done this development appraisal. I mean, it was nuts. I've never met anyone like it before. And he said, right, this is what we'll pay. And what he said we'd pay was, largely what I knew we could do the deal for. So we went along and we negotiated the deal with Mr. Al Fayed, who was the owner of Harrods. and a few kind of, typical, negotiation with a successful businessman. Anyway, we got the deal done. And the reason that I was so proud of it was because we actually ended up creating, and we were involved. I was lucky because, my company, Goldenberg Real Estate at the time, we were able to be involved in every element of the deal. So we acquired the site, we helped them to design it, and so on and so forth, put our ideas into it. Then there was a commercial element. There was a new office building that was built. We got to lease that, sell that. We were involved with there was retail opposite Harrods. We got to lease that as well. And then we had these I think it was 42 residential units. I think there were 38 apartments, and then the rest were townhouses. And the point was that it became the first sort of proper number of units, a apartment super prime scheme in London. The first one. Yeah. It didn't exist yet. It didn't exist. And that changed residential market in London, in my opinion. Yeah. The irony is that we sold those units for like £1,200 per square foot. And I think, and nowadays that would be, they'd be. What would that be today? Triple? Yeah, more or less. More or less. Yeah. So I don't know if it'd be triple today. I'm not sure if it's post-corona triple, but it was certainly pre-corona triple. Certainly a month ago. But certainly a month ago, it was worth £3,000, if not more. So tell me now about your investment company, what you guys have been doing up until the corona, and sort of now what's happened after. I know we're all sort of on a pause, but talk to me sort of about your business in the London market leading up to corona, so we have an idea of where you were in the cycle, what sort of activity was happening, how things were looking. Okay, so when we sort of we obviously, you'll know about Brexit. So Brexit caused a huge load of hassle here, because it basically meant that people were kind of standing back. People didn't really understand what was going on, and we knew that before Brexit. So in sort of 2018, before we actually Brexited. Yeah. Right. We knew that there would be a dip in the market, which there was. So we knew that in 2019 was going to be a much leaner year for brokerage, because it was going to be a lot harder to get people to commit. And most of my business was overseas, so helping overseas people buy in the UK. And despite that, the year before we left, we did sort of $700 million of business. But knowing that it was then going to dip because of Brexit, I decided that it was probably a good time to switch from brokerage into becoming a principal investor. Okay. And a number of the investors that I work with were saying to me, "Look, we're not going to be spending money buying new assets, but we want to improve our assets. Can you help us do that?" And I was like, "Well, no, I'm not really going to help you do that, because I'm not an asset manager, and bluntly, there's not that much money in that. What I want to do is I will invest with you, I'll work with you, and we'll help, and we will create value, and I'll run it for you in the UK, and you'll and we'll work out, I'll earn on a sort of profit share basis." So that led to the birth of my new business, which is Square Dial Real Estate Capital Partners, which I set up with a friend of mine called David Adler. David was the global head of real estate at Barclays Private Bank. He's a very bright guy who I've known we've known each other for many years. We've done business together, we're friends, and there was a lot of sort of complementary skills that we both had. And the premise of the business is, as I said, to buy assets for predominantly, it happens to be overseas investors. Okay. And in fact, we've got some family offices, for example, from the US, who are keen to buy here. Why they're keen to buy here? A, because they want to spread their risk, but B, for you guys in America, if you're in dollars, the pound's in a mess. So you get the double whammy of the currency play and hopefully some real estate enhancement. So that's attractive. So we set that business up, and we're doing some interesting things. Yeah, that's funny, because not so long ago, the last cycle, I think when you were out here looking at deals, we were talking about the other thing, that the currency
conversion was so strong in the UK that all the assets here were on sale, and now it's reversed. It's a really interesting thing. So what is the state of the commercial market? And if you can speak to the residential market, I know you have a lot of associates in residential as well. I'd be curious to know 2019, 2020, Brexit's happening, before the corona kicks in, was the market chugging along? Was it pretty solid, or was it already starting to get shaky out in London?
Well, pre-Brexit.
Well, no, after the Brexit started taking place, but pre-corona.
Okay, so the pre-corona things were looking okay. We had a big boost. I mean, when Brexit was done, everyone was like, good, let's get on with things. We've seen an increase. I mean, we had 55 in 2000. I think we had about 55 billion UK investment volume, about 55 billion. Which was up about 5 from the year before, 5 billion from 2019. I mean, okay. we're still below the peak of 2015, which was when we had the referendum, but it still was looking like it was going to be a strong year. There's a lot of money coming in from overseas, a lot from Asia. The UK itself was in 2019 was the second largest market in Europe. Yeah. At 55 billion, with Germany was largest at only 59, and Germany is a lot bigger than the UK. We think things were looking pretty good. We've seen key growth in employment. Everything was looking pretty good. The issue that we've got now, of course, with Corona, is what happens next.
Right. The $55 billion question. So let me ask you, before we get into what happens next, what is the high-end residential market looking like in London? What, if you can say, a few big sales or a few buildings, what are things trading for? And are they trading below the peak or above are we at the peak? In LA, we were at the peak before this hit. I'm curious with London, it sounds like it sort of was pre-Brexit. It seems to be when the peak was, but can you speak to that a little bit? Like, what's the residential looking like?
Yeah, well, look, I can speak loosely. I mean, it's not my forte.
Yeah, I know it's not your expertise.
But the market, it did dip around Brexit again. Why? I mean, if you take London as an example, we have lots of expats. London is a very cosmopolitan city with lots of overseas people. Loads of investment banks. People are moving here for work and so on and so forth. So for a lot of those guys who weren't buying long term, Brexit was like, well, hang on a sec. Am I going to be staying in London? So we definitely saw post the referendum, we did definitely see a lack of, a big reduction in transactions. But post after when we knew Brexit was going to happen, I believe from speaking to friends in the residential market, things did improve and volumes were back. I don't think pricing moved that much. But the point was that there was a lot more turnover. And I think, as I've heard you talk about on your podcast and your other messages that you've given and commentaries, we've seen there was more turnover. But we haven't seen. I don't think values came back enormously, increased enormously. Could I say? I mean, at the very peak, when we were talking before about Knightsbridge, I mean, that would have been £3,500–4,000 a square foot for in parts of it. I think that probably fell back to closer to maybe 2.5 to 3. So we haven't gone back to the super times pre-referendum. Pre-referendum numbers were big. And then the other thing that we have here, though, so your market is probably more tailored towards what we call owner-occupiers, people who are buying homes to live in. The investment market for residential here is enormous. So we developers in London have sold hundreds of thousands of units to investors from Asia, from Hong Kong, from Singapore, from Malaysia, from all over the world. Yeah. So so our market is we've got a kind of a two-tiered market, if you like, I guess.
Sure. Let me rewind a little bit. Back in the Great Recession, did you guys feel that pain in your real estate market? And what would you say was if you did, the peak to trough value decrease during that 2009-10 period. And we were peak to trough around 20% if you were in prime blue chip West Side real estate. Of course, if you were outskirts, some of people got obliterated. It was 50, 70, 80% dip. But I'm curious, prime London at the last recession, what was the peak to trough? Can you give us a rough breakdown what that looked like?
Well, again, I think you're talking residentially. I mean, in the commercial market, I don't think residentially. I don't think we had necessarily a huge differential. What we had was a lack of transactions.
Got it. So it wasn't pricing, it was volume.
Yeah. So, I mean, commercially, from the commercial market, it was really interesting because, there weren't that many people that were piling in. I always kind of assumed that, we'd have this big recession, obviously, and you're obviously talking the Lehman times and so on and so forth. And we'd have this big thing, and loads of people were coming in buying cheap real estate. But I don't think that we had quite as much of that as one would have expected. I kind of learned that, we talk about these kind of maverick real estate investors. I'm talking in the UK, and they weren't as kind of ballsy as I would have expected some of them would be. There were some good opportunities, but that's partially, and I think, that's partially because you didn't actually know how things were going to necessarily recover.
Well, of course.
Residentially, it's different. If you're buying a home for yourself, and you can say that home that was, £5 million, and suddenly you can buy it for £4 million, and you're going to go and live in it for the next 10 years, well, then you just do it. If you've got the money, you do it because it's a bargain. But when you're an investor and you're buying for you need to improve that asset over a period of time, that's slightly harder because you don't know how long it's going to be.
Yeah. All right. So let's get into some fun stuff now. We're dealing in a new world of Corona. How has it impacted the real estate market now? Is everything on pause? Have transactions stopped? Have prices fallen? Has anything happened yet? It may be too soon because you're only 2 weeks or 3 weeks into your shelter in place. But I'm curious, how has it impacted the overall real estate market, or is it just too soon to tell?
I think it's definitely impacted the market. I mean, there's virtually no transactions happening. There've been a few transactions that have stopped, but of course that's stopped, not necessarily cancelled, which I think people need to to consider. Because why have they stopped? Because no one really knows what's going to happen. I mean, what's interesting is we have I don't know if you have the same thing, and you have a different name for it, but we have in our contract here, we have something called a MAC clause, which is basically if there's a material change in the market or in the financial world, then you can, even though once you what we call exchange contracts, you call that's when the deal becomes legally binding.
Remove contingencies. We call it removing contingencies. Yeah.
Okay, so we've seen transactions that have stopped because of it. So the buyer basically gets their deposit back because of this, because of a material change. So we've seen quite a few of those happen, which very, very rarely happens. It's very rare that you see that come into play. But Corona is a material adverse condition, and which is what MAC clause stands for. Sure. So we've seen deals stop, but in reality, there's nothing new going on. I mean, there's been the odd deal that maybe, if you're a very long-term overseas investor, and in London we get lots of those. They just come here to park cash because it's safe, or even if we have a blip for 3 months, 3 years, these guys are going to own the real estate for 100 years. They want to buy it anyway. So that kind of stuff can still happen. The volumes are crazy. And that's shown by the fact that the big brokerage firms, all of them, the global ones that you have there and we have here, have laid off or furloughed. I don't know if you're familiar with this furlough.
Yes.
Yeah. Furloughed so many staff. So that's them saying, look, guys, we're not going to be doing anything. So we're going to just let the government pay your salaries for a few months.
So safe to say that you're all staying home. No one's walking around the streets. No one's going to restaurants. You're all like us. You're just home and kids are running around. And
Well, there's a lot of strategizing. So me and David and our colleagues and people that we deal with and investors, we're spending lots of time on Zoom. And I think if there's one thing the world can be grateful for at the moment, it's Zoom.
Zoom. Thank God for Zoom.
Zoom everything. Kids are doing Zoom school. Last night we did Zoom Seder. I mean, it's all about Zoom. We're doing this on Zoom. So,
it's all about Zoom.
Yeah. So a lot of strategizing. But, you're strategizing against who knows what, because we don't know what's happening next. But I think what we have seen a lot of here, and I'm guessing it's the same in LA and elsewhere in America, but what we're seeing here, we're seeing a huge increase in community spirit.
Absolutely.
And I just wonder if that could be, I think once we've embraced that, hopefully that will be here to stay. I mean, the UK, Brits have got this kind of personality of being kind of very stoic people. You guys walk down the street, say hi, good morning, how you doing, have a nice day. We just kind of grunt.
Not in LA, Bradley, not in LA. No one talks to anybody. They're in their cars.
People sit on the train in the morning some days and they'll see the same guy sitting next to them for 20 years and they never
says a word.
No. So, but what we're seeing here is we're seeing people helping. I mean, I'm sure the same thing, as I said, restaurants closed, but delivery is fine, right? The supermarkets, people don't want to go to the supermarkets. So, they don't want to queue up at the supermarket. The supermarkets can't cope with the deliveries online. So people are going to, getting local stores to deliver to them. So I'm kind of wondering whether then that changes the retail market. Because the retail market here, and I know globally, was in a big mess.
Yes.
Retail has a big problem. So what's this situation done to retail? Well, I say it's fast forwarded people's utilization of technology.
Yeah.
So I think that will change things. And I think it's also fast forwarded. It hasn't fast forwarded. It's brought back people's sense of community to help local retailers, the local butcher, the local fish shop, the local, whatever it may be, bakery. Right. And so maybe we'll see now in London, we don't have as much of this. We don't have as much kind of what I would call local entrepreneurial retailers because rents are ridiculously high. Everyone always wanted a multiple retailer in their store because they were regular, reliable rent payers. So I think that from a retail perspective, I think we'll see some differences. And are we now going to see people work differently? We're sitting in our homes doing our work, whatever we need to do. Are we people suddenly going to actually, because obviously people commute big distances in the UK. People could commute hour and a half to go to their office. Yeah. So maybe now they think, actually, I don't need to do that. I can work locally. I can work from home. And for businesses, they can save money. They don't need to pay big rents. Yeah. Or are people going to say, actually, yeah, I like the idea of that, but I need to see my colleagues. I need to see people. It motivates you. If you're in a team of people, you see the guy across the office is doing deals and you're seeing that you haven't done the deal for a few days or for a few weeks, you want to keep up. There's natural, competition. So I think we probably will see some kind of hybrid maybe of people working a bit more from home and just having maybe a more flexible way of living, working.
Yeah, I think a good point you made was that this will accelerate trends and it will accelerate the evolution of business and culture and how we've been living. And sure, there'll be some winners and losers and it's painful. And I think the silver lining, as you said, is hopefully people are grasping the sense of community more. They seem to be. Kids are riding bikes again in our neighborhoods, which I've never seen, and I've even started riding a bike again. I haven't been on my bike in 10 years. So there are some silver linings. Obviously, there's a lot of pain and, a lot of issues that we're going to have to deal with and a lot of unknowns. But there are some positives. So tell me, if you, when you can go back out to a restaurant, where are you going? What are the restaurants we should all be going to when we get to London?
Wow. We've got an abundance of restaurants. I mean, the problem is lots of them are going bust.
We don't know who's going to be in business. Assuming they're in business, where should we go?
Well, we have some staple, well-known restaurants in London, which are always good fun. Places like the Ivy, in the London Ivy, nothing to do with the two Ivies that you have in LA. which are great. So those are good. We've got, and then we have lots of kind of, cooler, more independent places.
Private clubs. Where should we go? Annabelle's?
Yeah, well, I mean, I'm a big fan of Soho House. I'm a member there. Obviously, Soho House is quite big in LA. And that's always a nice place. I mean, to have to go through a whole summer potentially of not getting sitting on the roof of Soho House in London or any of the Soho houses in London would be a real shame. So hopefully that will open up again.
Have you been to the Soho House in Malibu on the beach?
No, I haven't. No, I haven't.
We'll have to go there.
I haven't. Sorry, go on.
No, go ahead. I don't want to cut you off. My wife tells me I speak too much on these podcasts, so go ahead.
So no, there's an abundance of things. It's actually not so much. It's funny when you think back, you're kind of cooped up at home and you think, what do I miss? And that's quite an interesting point. And you suddenly think, well, I used to talk a lot about where I went for dinner and where I wanted to go. It's kind of, I've almost forgotten what it's like to go to a restaurant, and a bar. But we're coming into summertime, so hopefully we'll be able to do that soon.
So Bradley, do you think, through your crystal ball, this coronavirus is going to create buying opportunities and value plays for investors? Or do you think it's just going to be a blip and the market's going to snap right back? What's your crystal ball tell us?
I think, first of all, the market will come back. How it comes back, we don't know, because as we said, the key thing when you look at a deal is looking at a building, you're kind of thinking, well, what's the NOI? What can I get to? What income can I get? And in the past, you say, well, if that building next door was achieving £50 per square foot, and my building, I can refurbish my building and I can get my building to £50 per square foot. And that's how I can calculate how I'm going to make money out the deal. But now we don't know what the real rent is. So we need the market to come back and stabilize a little bit before and see how people are. Because remember, lots of these tenants are going out of business as well. So we're going to see, and that's a given. Businesses are already going out of business.
Right.
So we're going to see a lot more available accommodation. So of course, just basic supply and demand, it becomes a tenant's market. Which makes it difficult. But the big difference here, and people keep comparing, whenever you have a recessionary scenario, you compare it to the one before. The big difference, of course, is before we were in a situation where the banks were in a mess. The banks were selling off debt wherever they could, and so on and so forth.
Systemic economic bank issues. Yeah,
absolutely. Well, that's not the issue now. The other thing that we've had in previous recessions is recessions have been regional. So, for example, we could have a recession here, you could not have a recession, and you could come over here and buy up our assets.
Right.
The whole world's going to be in this recession. So the buying opportunities are completely different. So they will be there. But I think that all this is going to do, let's be honest, it's, we were probably getting close to a recession anyway.
Right. And this accelerated us into it.
Yeah, it's accelerated us into it and not enabled us to plan for it.
Right.
So, as I said, people used to be able to go from one country to another and buy opportunity. Well, you can't do that. So what does it mean? It means that we'll have to work a lot harder to create value.
Right.
The banks are under pressure. The banks don't want to foreclose on people in this time. The government in the UK have told landlords that, if you can't basically take any enforcement action on your tenants for 3 months. We need the banks to do the same thing, because there's no point not being able to there's no point the government stopping you from trying to get money from your tenant and the banks not allowing you, not being able to, basically the chain has the
chain of events. Yes. The supply chain has to be.
So, I think the main thing is probably not about, I think people that will be successful in this time are people that are able to react quickly to the new needs of the tenant and the occupier. So, we've been into a big time where people were looking at operational assets. So, or people were investing in what triple net type assets. And with triple net assets, they didn't really care much about what the tenant was doing, because the tenant just paid the rent. Now you've got to think about what your tenant's doing. Because if your tenant is offering a service or a product which isn't relevant,
right,
they're going to get in trouble.
Right. Which was always the case, but now you got to be even more sensitive to that.
Yeah.
They could be out.
Look at the hotel sector. It's a hundreds of billions of dollars it's one of the biggest sectors there is, hospitality. If you own a hotel now, you've got effectively a minimum of 3 months of almost no occupancy.
Yeah.
And then you've got to wait for people to start flying again, people to, see the need to travel. I mean, what we're seeing now with Zoom, going back to Zoom, is we now realize we don't actually need to travel to go see someone. If it's just a face-to-face meeting, what do you need to fly across the country for?
Right.
And then that problem was being exacerbated by all, green environmentalists and so on, who were really putting the pressure on people to not travel, to save the planet and so on and so forth.
Yeah.
So, we will see big changes. It's very hard to say what's going to happen, how it's going to happen. But the answer to the question, are we going to bounce back straight away? I can't see how that's possible.
It's going to take some time in your view.
Yeah.
Yeah. What's interesting is this is, as you mentioned, not a systemic economic bank issue. This is a health crisis. It's almost, to me, closest to a natural disaster, because except natural disasters hit in a specific area. New Orleans happened, and Puerto Rico. This is global. It's a national disaster, but it's everywhere. So there'll be opportunities, and it'll be interesting to see the smart investors that figure out what the niche opportunities are. But there certainly will be opportunities in every market. No one knows what they are. You got to have a little vision. So I'd like to kind of get into some of your thoughts. And you've been through a few cycles. You've been in the business a long time. What would your advice be to your younger self? Things you know now, things you've been through. What would you say if you were just starting out in your career? What sort of advice would you give a younger Bradley?
Well, I think that depending on what they're going to do, but I think in real estate, I think it's important to really understand what your tenant wants. So, historically, people would, build it and they'll come. But now it's not simply just building it. People want things differently. So, you had a guy, I can't remember his name, I'm afraid, but you had a chap on, I think on your, maybe the last podcast, who did creative, he didn't like the word creative offices. I've forgotten his name, but it was really interesting.
Richie Shamulian.
There you go. And I found what he said really interesting, and I think he was spot on. And that's what I would say to my younger self. It's stylized offices, stylized places of work, people that buildings that attract people to go and work in. It's very interesting. We all spend lots of money on our homes. We furnish them beautifully, we decorate them beautifully, landscape them beautifully. Yet, how much time do we spend in them? Yeah. Right?
Versus our office.
Most of our time in our office. And I've been to some offices which scare the hell out of me. And we've seen a lot of that, haven't we? We've seen that evolution in people wanting to work in a more, in a better way. And I think that's the thing, understanding what people want and giving it to and creating it for them. And that can be, whatever it may be. It may not just be offices. I mean, even in the industrial logistics sector, what did they used to build? A great big shed. Yeah. Now you go into these places, there's good breakout areas. You're thinking about the tenant. You have to think about the person you want in your building, and you have to find a way to set it aside from others. And that's even more relevant now, because, for example, as I said before, if we become a tenant-led market, and we've got surplus office space in the market, people are going to have choice. And so therefore you've got to try and create the best, sexiest choice you can for them.
Yeah.
So that's the key thing, I think.
That's good advice. So tell me a little bit about how it's affecting the family. You got the kids at home now for Corona? It's homeschooling? What's going on?
Yeah. We've had. So I've got 4 kids. I've got 2 young ones of 6 and 4. And they obviously, being younger, they need a lot more hands-on. So thankfully, my wife and I can both kind of spend some time trying to do some work and working, but I'm trying to do some work and try to kind of get involved.
I'm waiting for mine to run in and break this call up at any moment.
But when the kids, for my 2 older kids, they can log on to, my son's at universities back home living here, and he can log on and watch his lectures. For him, it's no big deal. And for my 16-year-old daughter, she just sits down in front of the computer and they're doing lessons on either Microsoft Teams or Zoom lessons. And it hasn't really changed that much. The thing is, they miss their friends. They miss seeing, it's easy to talk to someone on the screen, but, it's not quite the same as being in the room with them, is it?
No.
But, the family time thing is pretty good. I think that, I've realized, I think from a personal perspective, the one thing I realized is, we spend time with our kids predominantly when we're working on the weekends. But on the weekends, we're running around, taking them to places and to this club and that class and do this. Whereas you're not really doing the kind of basic raw stuff that we did as kids. Like you said before, riding a bike, the kids jumping on the trampoline in the garden, just doing normal things. And I've really, really enjoyed that. So, when I look back, the interesting thing, what will we, how will we describe this situation to our grandchildren?
Yeah, how will we? I'll tell you, I agree that the silver lining has been time with the kids, quality time, riding bikes, playing catch, reading books, relax. I mean, you never get to see them like this. They're usually so programmed. I'm programmed. We're all so busy with business and other things. That's been one of the huge pluses in all this, being able to spend.
And what's interesting? What's also interesting, Danny, is we spend, particularly with younger kids, we do our best to kind of shield them from bad things and bad news. And this is something they've kind of learned. They've learned from a young age, kids. Any kid over the age of 3 or 4 that understands, why we're at home, you kind of explain to them. So you're telling them about this evil virus.
It's real. This is life.
And then they're hearing things. This is the sad thing. They're hearing things you don't really want them to hear, but you can't escape it. You put the TV on, the radio on. You're hearing about people that are dying. We're hearing the neighbors are dying. I mean, I think this week alone, I've had, 6 emails from the synagogue of people from my synagogue who have died from this. And and when they're hearing about this, it's not something, you will kind of wanted to spare children from this bad news.
Bad news, right.
What we've got in obviously we have here the NHS, the National Health Service, which we're very, very proud of, and the NHS are they've become the British heroes. People have got the kids are drawing rainbows to depict as a symbol for the NHS, and they're sticking them up in their windows and their houses. In my street and other streets, kids are going out and they're kind of creating murals with chalk and pictures, for the NHS.
Yes, I see that all over our neighborhood.
Every Thursday night at 8 o'clock, the country, literally, honestly, almost in every street in the United Kingdom, people are coming out of their houses at 8 p.m. every Thursday, and they're doing like a 2-minute applause to thank the doctors and nurses of the NHS for the work that they're doing.
Thank God for all of them.
And we're just so incredibly grateful for the work that they do.
So grateful.
Yeah, and
all the people on the front lines, so grateful for all of them.
We underestimate them. We thoroughly, we're sitting here talking about returns in real estate and where the next deal is, and of course that's important stuff. But the human side of this is so much more important.
Yeah, we all take it for granted. We all take it for granted. The people on the front lines every day, before this ever happened, they were doing the same things every day. They're to protect us, and God forbid something happens to one of us or our loved ones. They're all there, the doctors, the paramedics, the police, even the military. They're all out there doing a service for the community and for the people, and we take it for granted for sure. So I'm much more grateful and appreciative. When you go through something like this, it forces you to evaluate and be introspective and realize how blessed we are.
And it would be nice if post all of this, if that can continue, because we're all very good at, how it is when people, when people sadly have, bad illnesses and they get through them and they go, right, I've got through whatever it may be, cancer or whatever, and I'm reevaluating life, and everyone says, yeah. But if you haven't experienced it, you don't relate to it. Well, we all can relate. Everyone on the planet. I mean, that's crazy, isn't it? The whole planet can relate to this situation. So those positives that we've got from it, the community spirit, the caring about your neighbors, spending time with your kids, doing all of these things. If we can just take that forward and create a better life, it would be amazing. And I think this is probably the only chance that we have for that to happen. Well, I hope it is. I hope this kind of thing doesn't happen again. But if we can take those things and bring them into our business life and our work life, it could create a much happier world.
Agreed, 100%. We really need to do that. So before we wrap this up, let me turn into a sort of a lighter note here. A funny story. And I don't know if you've heard this, if we've said this. So for 15 years, I think I've known you about 15 years, my wife has always referred to me as the Bradley Goldenberg of Los Angeles. She's always said that you're my twin brother from another. This is before I even met you. She used to say that. So I thought that was pretty funny. So let's have a little fun with this. If Jessica and I are in London and we're going to dinner, it's Thursday night, and we're going to dinner with you and your wife, where are we going? Where are you taking us?
That's a good question. Where would we go in London for dinner? Well, it depends whether we're going kind of traditional London or elegant London or just cool London.
Oh, man, you're deep. Let's go traditional London. Let's go traditional London.
Traditional London would probably be, there's some great fish restaurants. I don't eat meat, so there's some great fish restaurants in London. So old school traditional would probably be a place called Scott's, which is in Mayfair, which is pretty nice. But then we've got on the flip side, we've got a really cool place in Berkeley Square called Sexy Fish, which is a real scene. Some very interesting people in there. So
I definitely want to go to Sexy Fish then.
Okay, well, come to London. You and Jess come to London, and we'll take you there.
And I'll reverse the question. If you guys are here, you're here a lot, or you've been here a lot, where would you want to go? If you're in Los Angeles for dinner with us, where would you want us to take you?
Wow. It's been a while, so I'm going to say somewhere probably completely out of date. In fact, did we go there? Did I once go? I like that Katsuya.
Katsuya?
Is that what it's called?
Yeah, Katsuya. It's a big sushi place.
Yeah, but there was one down in Hollywood, I remember, and one in Brentwood.
Yes, exactly.
I probably haven't said the brothers, but I tell you where I really like what's that place in Santa Monica where you throw the nut shells on the deck.
The nut shells on the deck.
Yeah. You know the monkey nuts.
I have no idea. The monkey nuts. What's a monkey nut?
That's a good place. Anyway,
some place in Santa Monica where they throw monkey nuts.
Yeah. So basically, there's a bar area. It's outside.
Zoo?
While you're having a drink, and there's loads of monkey nuts, and you crack them open and chuck the shell on the floor. I like that place.
Oh, okay, that sounds good.
I don't know what it's called. Someone must know.
I got to think about what. Maybe Chez Panette. Is it an old spot?
No, it's in Santa Monica.
AJ, one of those places? I don't know.
I don't know.
We'll take you to Dan Tana's, have some Italian with you.
I like it there. I know
you do. Hey, man, well, thank you for joining us. I really appreciate you spending some time all the way from London. Love you guys. Send my best to your dad and your family, and hope to see you guys either in London or LA soon.
I hope so. All
right, thanks, Bradley. Take care, brother.
Okay, well, come to London.
Yeah, I hope so soon. See you guys.
Bye.
Cause I did it my way, none of y'all can say. In this life or the next one, watch me, I'ma be the best of I am what I am today, cause I did it my way, none of y'all can say.
Hey, I want to thank Bradley Goldenberg coming on with us today, live from London. It was our first Zoom call podcast. You can always find Bradley Goldenberg at Bradley Goldenberg on Facebook. Fantastic resource in the London real estate market, all around great dude. I really appreciate you guys listening in this tough time. Be safe, stay home, do what you need to do. This is only real estate. This is only business. What matters most is our health, our families, our loved ones. So thanks for tuning in. Please leave us a 5-star review. You can always find me at The Deal Pod on Instagram or thedealpod.com. We're going to be pushing out a lot of content now from home during this time. Appreciate you guys tuning in. We're out.
This life or the next one.